So there is always a question, hey, should we go with FHA or should we go with the conventional? I mean, there is probably a lot of books written and a lot of things on the website, and I'm going to cut down to chase and give you a small snapshot what is better. I mean, they're both loans, both great loans, which we need. But when to decide it, you go with FHA or conventional. So let me give you a rundown first. So minimum 580 score, conventional 620, you can do with a 3.5. Conventional, obviously, also you can do with 3%. There's a Fannie Mae Freddie program, Home Possible, Home Ready, but that's income based. So every zip code, you have to look at the income, and if you're making like 70,000 or more, then you won't qualify for the 3%, but then you have to put 5%. FHA, there's no income guidelines. If you're making 100,000 or $1 million, you can still, buy a home with 3.5. Now, the key over here is the difference, is the upfront PMI. Okay, there is a monthly PMI, as you can see, in both, but there's an upfront PMI, and that is what the culprit is. That 1.75 is a finance fee. There's an upfront PMI which goes to the, to FHA. And then this, normally people don't pay that. They add to their loan amount, which is not a good idea. And we'll go through their math on the next sheet. So let's look at it. Oh, we want to talk about in monthly PMI, there is a 0.85 all the time. That's the key part here. Doesn't matter your credit score is 700 or 800. If you're getting FHA, your PMI is going to be 0.85. I'm doing some calculations based on the 300,000. So monthly PMI is like about $211. Now, if your score is like 740, 700, over 700, monthly PMI with conventional is like 0.3. So that is a big difference. So it all comes down to the credit score. And we'll talk about that in a second. So monthly PMI 0.3, just like a 0.3 factor. So it's, you can times that. That's how you figure it out. So it's like a $77 versus $211. That's a big difference. We'll talk about the monthly PMI, but first I want to show you the madness goes into this FHA PMI. Okay, so 310 purchase price. So you say, oh, okay, I'm going with FHA. This is FHA example. 3.5. Okay, that's like a 10,800, right? 3.5. Just multiply this with this. You got, that's a down payment. Okay, so then the loan, the difference, that's your down. So that should be your loan, right? 299, 150. No, because there's the upfront PMI, PMI, which is 1.75, right? It's not with the conventional, it's only with FHA. Government wants their part, and that comes to 5,235. Now, a lot of people don't pay that. They don't have 3.5, or sometimes, they have the 3.5. Now you're asking them to, pay on the top. So people don't do that. So what people do, they add this to the loan amount. It's financed into the loan amount. So it's added. So now your loan, you add 299 plus 5,235, now it becomes 304. That is your loan, FHA loan, that's on what the payment going to be based on. So if you look at, you're not putting $10,850. In reality, you're just putting $5,615, which is close to 2%, right? So 1.75 is gone somewhere here. So you should be aware of that. I'm not saying, we don't do FHA loans, but if your credit score is great, then you should look into conventional. So here's my recommendation. Okay, if your score is 700, then don't look into FHA. Again, you can put like a 3%, and you should be able to get a conventional. But if you're less than 700, now if you're 620, 640, whatever it is, even you're 680, 690, I would recommend you going with the FHA because the PMI really change if your scores are higher. Then only reason, because if you have 680 credit, and if you want to go with the conventional, your PMI is going to be higher. Just to give you a comparison, some just number over here, 3.99, like today's rate, today's market. FHA, your payment is like 1661, and this is with 680 credits. And if you have with the conventional, your payment 3.99, you're getting your payment going to be 1605. Just a payment, not taxes, insurance, that's separate. Just payment and the PMI. So if you look at it, that's pretty close. It's like a what, $50 different or $55. But look at the difference over here with FHA, and that's why sometimes it makes sense to go with the FHA route, even though there's a 1.75 PMI. Look at the credit. You're getting 6,391. That's a lot of credit for use for your closing cost. But if you wanted to go with conventional, then you're just getting $112. So that means, you have to pay credit, you have to pay closing cost out of your pocket. So what is the next solution then? My recommendation again from here would be go with the FHA, get your score to 720 or 700, and then refi into a conventional loan. I do understand that upfront PMI which we talked about, 1.75, that's gone. That is the money taken by by the government. So there's no way, like if you refi, that you will refund anything back from them. I hope that clarify. I'm going to do a mortgage analysis. I'm going to send you a link down below. Then you can look at it, the savings with the FHA and the conventional. All right. Thanks.